Well, hello folks, I'm L.A. Little and this is your weekly NeoTA wrap. When we take a look at these markets, we do it from a neoclassical perspective. Each time we ask ourselves just one question, and that is what happened last week and what might it tell us about the coming ones. I do a show every Sunday evening, broadcast at or before 10 o'clock Eastern Time. I archive it on YouTube. It's under the channel L.A. Little. If you subscribe to it there, anytime content is pushed, you'll be notified. As far as what happened last week, it was an up week overall. Big spike down off that China devaluation, but by the end of the week, they were back up and green again. Dow still down for the year. NASDAQ, NDX still up fairly well. The rest of them almost break even. So not a lot changing there. If we come to the weekly charts, and what we're going to do today is spend a little bit of time looking at the sectors, but before we do that, let's pop over to the weekly charts on the NASDAQ, the NDX, the S&P 500, and so forth. So here's the daily view. Here's that big spike, hammer reversal that came in on the 12th. Tried to push it down, right? Volume expands, leave volume at the bottom, yet you flip around and you close it back up here inside this big range. If you bring it over on the weekly, it's the same thing we've seen, and that is that nothing changed, right? It's still this broad 90-point or so range. That range is still in effect. It's been in effect since February and still in effect, and we're in August now. So 6 months pretty much of just sideways action within 90 points of the top and bottom. Now there are some ranges elsewhere if this starts to break, most notably to the downside, and that is that you have another range down here, and then of course if that breaks, there's another one back below it that gets you into the October highs, and then underneath that of course is the October lows. So if it wants to cascade lower, it has plenty of stuff to work with on the way down, but so far there's no indication that it's going to, at least not from the indexes. If we look at the S&P, on the NASDAQ, NASDAQ pretty much the same story. This is a weekly view as well. So you have a range here. The range is in this area. NASDAQ is actually playing around right in the middle of that range, and not much has changed. Last week you pushed down, you didn't have any volume. On a weekly basis, these indexes look as if they're probably going to try to bounce this week. That's true on the majors. It's also true on the Russell. The Russell gets under, back over, a little less volume. Tested into this big high volume bar over here from the 22nd. That was the triple witching way back in the December of last year. That price point's right in there, came right into it, right? Doesn't have the volume compared to this. Also reverses a little doji on a weekly. What does it say? It says it can make it back up to test the top of the swing point low, which is 1240. So from the indexes, just glancing at them, they look as if they can try and work higher this week. Moving over to the world markets, you've got a lot of damage in a lot of places. Australia breaking down on the weekly chart. Brazil has already broken down on the weekly chart, trying to break down more. If you look at Europe, France is still hanging up in the top half of its ranges. So you've got the range here, and you got another range right up underneath it, right, which it explored on that Greek situation, spikes back up, but here it is coming back to test into that middle of that range and try to break down in the lower half of it. Germany's already done it. And so when I see Germany in this particular case already down there, and then I look back at the CACs, it makes me think that the CACs is going to do the same thing. You're going to see it come back into the lower range as well as Germany comes back in here and test into this area one more time. So that's the way those are set up. If we move over to Asia again with Hong Kong really working its way back down to this big volume, high volume low. Now, it hasn't spilled over into the Shanghai because the Shanghai is hanging up there for all the intervention that's taking place in that market. So world markets, a lot more mixed again. And why is that? Well, it's because of the devaluation of the currencies that took place last week that we talked about 2 or 3 times during the week. And that devaluation, of course, hurting other countries that compete with China basically they all just got taxed, right? And so that's the situation. If I move over to the sectors, and this is where I wanted to spend a little bit of time tonight, because we don't spend a lot of time here, but what I wanted to do was to show you the relative strength slash weakness of some of these, or actually all the sectors, just walk through them all. So if I'm going to do this exclusively on the weeklies. So we're on the weekly charts. This is the IBB. It's into the big bar on the way back, right, which is the swing point high. So this is a bullish retest and attempt to regenerate higher. That's the IBB. So weakness, but can try to regenerate higher. That's what it's doing at this particular point in time. IYT, this is the transportations. Now the transportations are doing something different, and they've been weaker, and that is they're coming back up to try to test back into the swing point low, which is a bearish retest regenerate. So in other words, if you're not familiar with the terminology, you have some sort of a trend to the downside, you get a counter trend move that is trying to set up another regeneration back to the downside. So the bearish retest regen is you come back to the swing point low, you attempt to test into it. If you fail to get over it, then you're going to try to regenerate lower. That's the essence of it. And there's statistics behind it all in terms of, you know, what the probabilities are and so forth. And they work pretty well. Even in a crazy market like this, they work pretty well. Here's the SOX. Now, what has the SOX done? SOX has gotten under a whole bunch of swing point lows. So you broke one last week, which is here, right? You broke one prior to that, which was there. You had one up there that was broke as well. So when I look at the SOX, what is the SOX doing? It's trying to come into the next swing point low, the high of the next swing point low, which is that October low where all the volume lies. It's trying to work its way down there. It may get a bounce before it gets there, but it does look like that's exactly what it's going to try to do. Get some sort of a bounce, do a retest regen, a bearish one, and then try to regenerate back down into that bar. If we look at the basic materials, and so we're just going, you know, alphabetically here the way I have them listed. This is the XLB. It almost, this is on a weekly, almost got into those high volume lows. Didn't quite get there. It's getting a little bounce. What is it doing? Well, same thing. Just think about it in terms of what did you break and what are you trying to test back into. In this case, it broke this swing point low, and right above it, it broke another one. So I think the crux of the argument will be right into this area here. It will be hard to get over. That's on the XLB. The XLE is already broken all the swing point lows. Underneath them all on the weeklies, and on the monthly, it's actually trying to break down it's breaking down as well. Here is the XLE swing point low coming back up to retest regen lower off of it on a bearish retest regen. Financials, now they've been stronger. The financials are actually in a little different situation, and that is that they are pushing down with some volume, right, but not enough to break them down yet. So they bounce back up, but that says, hey, this is probably going to come back down there again. So if you look at it on a weekly basis, you tested this swing point high, which was a bullish retest regen again, and that was from this price point here. So far, every attempt to break under it, you know, since it's broke over here, each attempt to break into it and under it has failed. But now you had some volume push on this test towards the lows, and you go back over here and compare the volumes, you can see that the volume on the way down now bigger than the volume on the way up. That says it's probably going to come back down there and test it again. And the industrials. Now the industrials actually are just testing into the swing point low retest regen to try to regenerate lower. XLK, really just a mess all over the map, but not a bad situation, still holding up, high ranges holding up near the highs. If we look at the and it had already broken on a swing point high retest and failed to regenerate higher, so it's just a range trade. XLP still up here at the highs, got over them. It's doing retest regen bullish. XLV, which is the healthcare, also broke over it. It's also testing bullishly on a retest regen. XLY also broke over it here. Now it's coming back, retesting into it, and also doesn't have the volume yet either. So In almost all the cases, the strength sectors continue to be strong, the weak sectors continue to be weak. They're split about half and half, but the difference is that the majority of the weighting of the indexes are in the strong half. And that's why the indexes still sit within 2.5% of the all-time highs. There's really not much more to tell you tonight. That's about all there is, and I'm probably just going to leave it at that, and we'll see what the evidence is this week. In terms of what I think is going to happen, you know, the setup here is to try to push higher. So if we don't get a push higher, that will tell us something, but at the same time, if we do push higher, all it does is say that the range trade's probably still in effect, and that we simply got another bounce in the inevitable continual set of bounces we keep getting. So until next time, I'll leave it at that. Thanks for joining me, and I'll see you as the week unfolds. Take care, and I'll see you next time.